for the last year plus, I've been saying we need regulation, and I know that's kind of like taboo in the crypto markets, but like Magic said, if we want big money to get involved, and you want Bitcoin to go to 100,000 to 500,000, you have to get big money involved. And again, these funds, these pension funds, all these things, they have this fiduciary responsibility to only invest in things where they do their due diligence, they can quantify the risk. And when you don't have transparency and like anything like that, they just can't do it. And if you got these big players involved, Bitcoin would soar. I mean, just imagine them putting like 1% of all their assets and, trillions of dollars into Bitcoin, and we're all rich, right? So, I mean, some people look at it as as like, oh, don't get involved. We don't want regulation. We don't want the government to control it. I'm from the investor side, right? I've always been a trader and investor in my life. I'm like, I kind of want to know if something's a fraud so I don't lose all my money, right? I mean, like, let's do this. Let's get it in there so we can all make money on the way up. And I think that's what we need. And I agree that the low will be probably put in right around when that regulation comes out.
Gareth Soloway, chief market strategist at InTheMoneyStocks.com, has reacted to the latest crypto crash, as well as gives a new prediction for the direction of Bitcoin price. In the mad dash to calm worried investors and prevent bank runs as the FTX contagion spreads throughout crypto land, cryptocurrency exchanges across the ecosystem have started issuing proofs of reserves in an effort to halt the outflow of assets from their books. This involves the release of wallet addresses for both hot and cold wallets, allowing users to check the amount of funds controlled by the platforms, although it doesn't provide insight into any liabilities. The process is facilitated by what's known as a Merkle proof, which is a cryptographic tool that helps create a summary of funds held in an exchange's wallets and generates a proof that can be verified on-chain, all without exposing sensitive customer information. Amid the liquidity crunch that forced FTX to file for Chapter 11 bankruptcy on Friday, crypto investors have been pulling their tokens off exchanges to avoid the possibility of lost funds. Data from the on-chain data provider CryptoQuant shows that Bitcoin has been increasingly pulled off exchanges since Sunday. One of the first firms to prove its holdings was Binance, the world's largest and most active cryptocurrency exchange, which for a brief moment considered acquiring FTX to help limit its damage. According to a blog posted by the exchange, it currently has 475,000 Bitcoin, 4.8 million Ether, 17.6 billion Tether, USDT, 21.7 billion BUSD, 601 million USD Coin, USDC, and 58 million BNB. This list only includes the top assets held by the exchange, which currently supports more than 600 tokens. On-chain data provider Nansen used the data provided to compile a dashboard that shows Binance reserves. At the time of writing, the dashboard indicates that Binance's net worth currently stands at $72,661,359,625.28. Let's listen to Gareth Soloway as he expressed his concern over crypto regulation, even though he's advocating for it.
Historically, great ideas start under the best of intentions, right? And then over time, regulation or big money comes in and kind of screws it up. And I hate to say it, but it's probably going to be the way crypto goes. The only positive is if we're smart and we accumulate down here, and if it does happen to go lower, we can all go for that ride and make a ton of money along the way. But I have no doubt that, when has the government actually done anything that's been great, right? I mean, it just doesn't happen anymore. So
Gareth Soloway also has some prediction for the direction of Bitcoin based on the latest data and charts. Let's hear what he has to say.
Yeah, so I mean, I think looking at the chart, and I can pop up my chart real quick, but basically it was a scenario where the chart was telling us we were going to go down, right? You had this classic bearish channel going on here, especially off of this most recent dump in June. And so it was just a matter of when it was going to break down. And it's the amazing stuff about it is, the bearish chart, then, you don't know what it's going to be. In this case, it was this black swan event with FTX. But the problem here is that you now have a breakdown of kind of this trend line that marked the low pivots all across here. And so if we can't recapture it in the next day or two, I would be really concerned that this is the next wave of selling that takes us down 12, 13, 14,000 area. Now we got to 15 and change. I was a little surprised we didn't pierce 15. Sometimes they like to pierce those even numbers, trigger stops before a bounce. But I think the Fed kind of saved it. Well, not the Fed, the CPI number saved the day. It helped get bullish sentiment on there. The one thing I'd like to point out, though, is that even with Bitcoin's move, it still comparatively to the stock market didn't outperform that much. The NASDAQ was up 7% on the day. That happens once every 10 years in the NASDAQ. Today was not a once every 10 years type epic move up in crypto. So I think we have to also kind of take that into account. And there's just a lot of damage done in crypto. I mean, we thought we got through it with Terra Luna, and now you have another issue here where the mismanagement of client funds is involved. And it just begs to ask for, I hate to say this, but we need rules for crypto. We need transparency in these companies. Otherwise, I fear that, and again, I wonder how many more things out there are going on that we aren't aware of. And I think as the market goes lower, and I do expect it to overall go lower, I think we're going to see it. The one thing I think is the coolest thing, I got to show this because this is just mind-blowing stuff. So let's go back to, I'm going to take you guys all the way back on my chart to 2018, right? So here we go. All right, so basically look at this low here, which was the beginning of this quiet period, right? This low began in basically, well, really it's over here in June, right? So here was your low. You got this bounce, a little bit of chop, and then it went to sleep. And remember, crypto went to sleep over the last like 2 weeks. It was super, even 3 weeks, it was super, super quiet. And then look at what happened in 2018. You had this dump, kind of pause, and then this is basically where the final flush came in. We lost 50% on Bitcoin. Okay, so again, remember June, and where did the dump start? In November. All right, now let's spin ahead here to the current price action. And what we can see is in June, again, just in 2022, that's when the low was put in. You got kind of those same early bounces here. And then we went to sleep, and then we dumped out. So it's amazing. June to November in 2018, and then the dump, June to November in this sixth segment, and then the dump. And again, I wonder if this is kind of that final move lower that could take us down 50% like in 2018, which would basically put Bitcoin around 10,000, would maybe mark a low pivot. So just kind of some cool stuff there. I'll bring up the chart here and take a look. And basically what we see is again, you broke this lower thing. And like he said, and like we talked about earlier, you have to recapture this area here. I really want to see it like a weekly close back above the low from June, which was around 17,600, give or take a little bit. My guess is it's not going to do it, just based on what we're seeing in the crypto sector. And again, I think there are more black swan events out there that will likely come to light, and it's going to freak people out. It makes them very cautious about buying down here. Having said that, I think for me, again, the 13,000 area here, if I put in a trend line, I'll show you guys what I'm looking at. So I think this is your next major support area right in here. And you can see it's this pivot high, and then there's this little blip right over here as well. And before it broke out, and that was really the breakout that started around 12.5, is what took us all the way up to that 65,000 on that first high up. Now, one of the things I liked that Magic said was that basically you can see here, if you go back to 2017 before that run, and you take a line and you connect it through the lows in 2018, so the cycle lows prior to the 2017 point, the aftermarket lows from 2018 after that cycle high, it connects right through the COVID low right here, and that gives us right around 8,000, 7,800, kind of right around that 7,500 level. So I do think if 12 and 13 area breaks, that's your next likely target. And it makes a lot of sense considering the uncertainty in crypto, the fact that, I mean, you look at the stock market, and I really tie crypto in with the stock market a lot because it's a fear factor, right? So if the stock market goes lower, and I do believe it will go lower in 2023, it's likely to take crypto down. And I think we have to always remember that, this is the first cycle with no Federal Reserve stimulus, and at least for now. And even if they pause hiking rates, they're not going to go to lowering rates until inflation is substantially lower or the economy is essentially in a depression and they have no other choice. And so what that does is it potentially prolongs the bear market longer than previous bear markets, which were like 12, 18 months. And I think, again, we could be in a 2-year plus bear market before we finally get those lows. On the positive side, I'm just looking to accumulate Bitcoin. I'm really not going to any of the alts. Maybe Ethereum, I'll kind of hodl a little bit. But we know that Bitcoin is that commodity per Gary Gensler, so it kind of gives me a little clarity on the regulation for that. And I guess I just want to stay with best of breed at this point. So as it comes lower, I'm just basically putting a little bit of money to work every $2,500, $3,000 lows from this point on. And I'm just going to kind of tuck that away, as I do think we will eventually get that bull run. I do think Bitcoin eventually becomes more of a gold scenario where it does well in uncertainty, and the scarcity aspect, I think, does really, really help.
The stunning downfall of the FTX exchange, one of the biggest and most reputable players in the market for digital assets, is sparking alarm among people who own cryptocurrencies as investors run for cover. There are still many unanswered questions, but two big ones loom. How far will the damage spread, and can the beaten-down crypto industry bounce back? Industry insiders are debating whether to call the implosion of FTX, which filed for bankruptcy on Friday, a lemon moment, referring to the 2008 collapse of the investment bank that sent shockwaves around the world. Many think it's an apt comparison. What's clear is that the fallout from the FTX crisis injects significant volatility into the crypto ecosystem. The episode has destroyed confidence and emboldened regulators, which are now on high alert. This was one of the most trusted entities in the crypto space, so it will take some time to recover. The situation is still developing quickly, but one concern is how it could ripple throughout